Hi everyone, welcome to another Weekly Forex Forecast for the week ending April 13th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the EURUSD, the Pound USD, the Dollar Yen, the New Zealand Dollar versus the US Dollar, as well as gold or XAUUSD. The Euro is going to be one to watch over the coming weeks, and I'll show you exactly why I think so. I'm also interested in shorting the New Zealand Dollar over the coming days, and I'll show you exactly what I'm looking for there. So let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, we have the EURUSD, and we can see how the pair broke back above 108.25 last week. So this was a key level I talked about, and we also looked at how the pair was coming close to the bottom of that descending channel that's been in place since late 2018. And so this break back above 108.25, you can see how Wednesday's session did catch support right there at that area. And furthermore, you can see where the euro topped out last week just below 109.50. So 109.50 was the resistance level I mentioned last weekend, and it's currently acting as resistance. So until we get a daily close above 109.50, this area will continue to serve as resistance, with a close above it taking on that 110.10 resistance level. So if I zoom in, you can see how both of these levels have served as support and resistance over the last few weeks. So notice how 109.50 was support back here. It was support on this candle, then acted as resistance, and it was even support way back here. So 110.10, you can see where it's very close to this low back here, and it also served as support through this area. So these are going to be two to watch, 110.10 and 109.50 this week. And of course, 108.25 will serve as support if we do see the euro rotate that low. Now keep in mind that although we've seen a couple of false breaks here recently, we had this one down here below this descending channel that we've been talking about now for months, and we also had this one up here, which is above the level that extends from the 2019 high. However, if I move out to the monthly time frame, notice how the pair is still trading within this descending channel on a monthly closing basis. So although we've had daily and weekly closes beyond this pattern, right now, on a weekly closing basis, you can see where the EURUSD is still trapped in this downtrend. So until we see a daily close either above this area or below it, it's going to be tough to catch any type of momentum here, and I do expect this back and forth price action to continue. Furthermore, here's why I said that the EURUSD is going to be one to watch over the coming weeks. Right now, this currency pair is at a pivotal moment in history, and that's no understatement, because if we look at the monthly time frame, going all the way back here to the 2000 lows, notice how the EURUSD is sitting just above this multi-year trend line. So you can see where this area served as support recently, and furthermore, we have an upper boundary that extends back here from some of these 2007 highs and connects with this one here and also this recent one. So right now we have a wedge pattern that could dictate the future direction for the euro. Obviously, if we get a breakdown of this area, it means that we could see a much lower euro over the coming weeks and months, whereas if we see a break higher, that would signal strength and perhaps a return to some of these highs. So as of right now, the future direction for the euro is up in the air, and it all comes down to this multi-year wedge pattern. So I'll finish up by stating something I mentioned last week, and that is that I'm not really interested in trading the EURUSD right now, simply because we lack momentum. Right now we have this back and forth price action, which makes trading the euro difficult, and we also have absolutely no momentum here. Right now the pair is trading sideways, and although you could look for shorts from resistance and also longs from support, it's going to be difficult to let a trade run because we don't have that momentum that we need. However, if the pair does break free from that multi-year wedge, we could see the euro trend over the coming weeks and months, and that's something that I want to keep a very close eye on. The British pound continued its consolidation last week against the US dollar, where we saw that 124.70 resistance level attract sellers, and we also saw this 12200 area serve as support. So as I mentioned last week, it's going to take a daily close above that 124.70 area to extend the pair higher, and it's also going to take a close below 12200 in order to send the pound lower. Now below 12200 we have this 120 area, which is very close to the 2019 lows, and a close above 124.70 would target the bottom of this descending channel. Now, as of right now, I'm not a big fan of trading the pound for the same reason that I'm not trading the euro, and that's because we have no direction. So right now the pound is caught between these two levels. It's consolidating, but also recently you can tell how we just have no momentum here and the pair is trading sideways. Furthermore, we don't have a pattern here that I can use to give me an edge. So I like to trade patterns such as this channel back here. So I talked about this last week, but in my opinion, this right here, this retest, was an A+ setup because we had a breakdown of this 2019 channel and the pair broke down through here. It then retested that level, and of course, that's where we got that sell-off. So without a clear pattern here, I don't like the idea of trading the pound, and I do think that there are better opportunities out there. So for now, I'm going to stand aside and just see what happens between 124.70 and 12200. If we do get some type of pattern that develops over the coming days and weeks, I may look to trade the pound, but for right now, I'm going to stand aside. I talked about the dollar yen on Thursday, where we had this close back below the 108.50 level. So 108.50, you can see how this level was resistance back through here. It was resistance on this candle. However, the dollar yen closed back above it right here. Now, on Wednesday, the pair did find support there, but then Thursday's session closed below 108.50, which means that this area should attract sellers going forward. Friday's volume was light because of Good Friday, but you can see where the dollar yen is so far holding below that 108.50 level. So for the week ahead, 108.50 should serve as resistance with support coming in right around that 106.80 area. Keep in mind that that could be as high as 106.90 based on this low back here. Now, I do want to point something out on the 4-hour time frame. If we strip everything away except for this short-term trend line, and I pointed this out to members in the member forums on Friday, that we have this multi-year low. Okay, we have a fresh multi-year low down here. This high right here is actually higher than this one. So we have currently a lower high, and of course, this one here is lower than the last. So we have lower highs, and we also have a fresh multi-year low. Furthermore, you can see how last week appears to have closed below this short-term trend line. Now, it's not the strongest trend line that I've seen, but if this is any indication of weakness, we could see the dollar yen move lower this week. Now, one thing to keep in mind too, this lower high right here, we need to see a close below 106.90 in order to confirm that this is a lower high compared to this one back here. Because as of right now, if the pair were to turn higher, take out this high up here and move back to test this high, obviously the idea that we have lower highs could be in question. So we need to see the dollar yen move lower this week, take out 106.90 and head lower to confirm that this high back here is a lower high. But as of right now, just keeping things really simple, we have a new multi-year low. We have what appears to be lower highs into this trend line support and a breakdown. So as long as that 108.50 area holds as resistance this week, we could very well see the dollar yen trend lower down here to 106.90. Now, there are no guarantees, so a break back above 108.50 followed by a run at these recent highs would negate the bearish outlook. Next up, we have the New Zealand dollar versus the US dollar. I wrote about this one last week, and before that, I wrote about it a couple of times where I was looking for a run to 6,200. So this level right here is the one that I've had my eye on ever since we got this bounce from channel support. So notice how we have this short-term descending channel that could continue to play a role over the coming days. Notice too how the top of this channel intersects with 6,200, which if I move out to the monthly time frame, you can see a couple of things here where we have this recent breakdown of a multi-year wedge. And note too that this wedge extends from the 2000 lows, very similar to the one we saw on EURUSD. So we had this recent breakdown, and you can also see how 6200 served as support back here and again on this candle. So 6200 is a confluence of resistance that I want to keep an eye on, and if we do get a move into 6200 followed by some type of bearish price action, that's an area that I want to look to short the New Zealand dollar. I don't want to short it just yet because I do think that we have more room to run to the upside. However, if we do get some type of bearish price action up here, I think we could see a rotation lower into 5860, 5650, and perhaps even lower. So 6200 is the level to keep an eye on. I'm also not buying the New Zealand dollar here though, because I don't want to fight this momentum. So even though we could see a run up here to 6200, I only want to look for shorts at higher levels. I don't want to look to buy the pair because right now it is in a downtrend. So 6200 is the level to watch. And I think we should also keep this descending channel on our radar, because if this area does produce some type of selling opportunity and we get a rotation lower, this channel could be the one that dictates just how low the New Zealand dollar can go before it bounces. Alternatively, of course, if we get a close above 6200, that could negate this entire idea and send the New Zealand dollar higher up here toward this wedge resistance. All right, I want to wrap up with gold, or XAUUSD. I talked about this one last weekend, and if you saw that forecast, I mentioned that we had this 1450 support, 1550 support, and also this 1690/1700 area. Notice how we have several highs back here on the weekly time frame, and last week touched right off of 1690 before finding some sellers. Now, a few things happened last week that I want to show you on the intraday time frames. So if I move in here to the 4-hour time frame, you can see where we had a continuation pattern that developed, and I mentioned this in the members forums on April 3rd. So we had this inverse head and shoulders pattern, which typically occurs at a swing low, but it can also serve as a continuation pattern. So notice how we had this low back here. We then had the head and then the right shoulder. Okay, so left shoulder, head, right shoulder, and we had this breakout through here. So on Friday, April 3rd, I mentioned when the pair was trading right through this area, I said that it looked like it wanted to break higher and that a breakout would target 1690. You can see where we had the breakout, moved higher, consolidated, and then retested 1690 on Friday. And for those who missed this initial breakout, I also talked about this consolidation. So if I move into the 1-hour time frame, we actually had a channel that developed here on the 1-hour chart where you can see this consolidation formed a descending channel, which could also be called a bullish flag pattern. So we had this move higher above 1640, which that area started to hold as support. And then notice how this candle right here broke out and sent gold higher up to test 1690 resistance. So there were actually two opportunities here. First, it was this break above the neckline. We then had this breakout from this descending channel on the 1-hour time frame. So as of right now, if we take a step back and look at the weekly time frame again, this market is clearly still in an uptrend. And any rotation lower this week, I do expect 1640 to play a role as support. Now 1690 is of course resistance, and we need to see a daily close above that to take on the next key resistance up here around 1800. Alternatively, if we see gold take out 1640 on a daily closing basis, so if we see a daily close below 1640, that area could become resistance, and we could even see gold push down here to 1550. But again, all in all, this market is in an uptrend, and therefore you may want to restrict yourself to looking for buying opportunities only. Yes, you could short some kind of weakness here, but you would be going against the momentum. So again, a break above 1690 would target 1800, whereas a close below 1640 would signal weakness and expose 1550. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.